Hey guys, what's up? It's Tori here, back again with another weekly market outlook video. Currently, it is Sunday 6 p.m. for me, just before the market opens. So I hope you all have had a great weekend, doing your studies, your backtesting, your data gathering, or maybe even just having fun with your family and your friends, not even about trading. Personally, I just watched Sinners, which is something I didn't manage to catch in cinemas this year, which is a shame because it is pretty much one of the best movies I've ever watched, period, and the best one this year so far. So recommend you all to watch it. But anyway, let's just get straight into the video, yeah? Alright, so enough waffling. Let's take a look at what we saw last week. I mean the previous week leading up to this video. So we did see NP reports, right? Jobs data, it came in pretty weak, which is 2 weeks ago from now. But you take a look at the charts. Even with that weak NP data, I was expecting a deeper pullback for the previous week, which is 4th of August from Monday, and we didn't see that, right? Instead, we saw US equities continue to rally like nothing even happened, right? Currently here on the NASDAQ daily chart, we are seeing the NASDAQ coming very close to its previous all-time highs right here at 23K, right? Take a look at the Dow Jones as well. It is showing pretty much the exact same thing, showing a very strong recovery. However, we are currently failing to break above this area of resistance around the 44K mark. But the S&P 500 has also seen a remarkable recovery. Same thing with the NASDAQ and the Dow, coming very close to its all-time highs with no clear daily resistance in sight to push it down at the moment. These three indexes have been rising and recovering very quick after that sharp drop that we saw on a Friday. Even the Russell, right? Take a look at the M2K index. The Russell, this is from last previous outlooks. Even the Russell, which has been lagging for years at this point, is catching a very strong bid this year, right? The initial pop was really high on Monday, and then we saw a continued range throughout that week. But even without that, right, it's still recovering really quickly and catching up onto the big three indexes for the US. So now we're seeing all of these reactions, but why is every dip currently in the markets being bought so aggressively, right? Well, I think it comes down to four key drivers, right? The first one being obviously economic performance, the second being corporate earnings, the third being interest rate expectations, and the fourth being none other than fiscal policy, right? So we have these four main factors, and the common thread tying all of them together is stimulus, right? Whether it's government spending or monetary easing or corporate strength. When we see stimulus come into the markets, it means we are seeing more liquidity in the system as a whole, and that tends to flow into equities, into indexes, which are propping them up. So for example, let's take a look at the economy, right? The latest GDP data came in stronger than expected, which is 3% growth versus the forecasted 2.5%. So I expect, or I think, that some of that rebound is due to swings in imports and exports as businesses they adjust to tariff expectations. But even accounting for that, it's a pretty robust number. Like when you compare to other major economies, the current US growth projections, it remains higher for the rest of the year, the rest of the quarters. It's going to remain higher, right? That's because it's important, because strong relative growth, it often attracts foreign investments into US assets. Okay, so that's why we're probably seeing these indexes being propped up currently the way that they were. Now, of course, all of the data, most times they are not generally aligned, right? Even last year, in 2024, when we saw that crazy bull run, when everything was looking so great for the US economy, you technically could not be short at that time on any US based assets. But as always, not all the data is positive, right? Currently, it's not positive at all, right? We're seeing service PMIs slipping to 50.1, down from the mid 50s last year in 2024, and just barely made a a contraction above that contracted territory, right? So take a look at all the data, right? The bright spot at the moment is obviously looking at the consumer part of the data side, which is seeing retail sales, rising 0.6% month over month, which is far above the 0.1 forecast, right? Consumer confidence as well, which is, well, at the moment technically still beneath last year's highs, has pretty much bounced back from its April lows, right? Obviously, jobs data is kind of mixed. NFP, the latest NFP report was pretty much weak, and prior months were also revised lower, but private payrolls actually did beat expectations, right? Unemployment currently sits at 4.2%, which is still well below the long-term average of, or at least what the government wants to keep, which is long-term average of 5.7%, right? Trade employment has likely helped keep consumer spending steady, which means that consumers are actually pretty confident in the economy, right? So just summarizing everything that I went through just now, which is which is a lot really. All in all, the economy is holding up, right? The economy is holding up, not without its soft spots, but obviously enough to keep the bull market dream somewhat alive, right? Especially so if the rate cuts expectations arrive this year, that's going to make the bull run dream even more alive than it currently is, right? So right now, September is the month that many expect that first potential rate cut. If you take a look at the CME Fed Watch 2, right? So corporate earnings, apart from econ data and econ performance, has also been another tailwind, right? Apple has beat its estimates in terms of earnings. Amazon did that as well. Meta also came in strong alongside Microsoft and all those other big cap companies, right? And these results, they basically reinforce the idea that at the moment, corporate America is still giving and still generating really strong profits, which then supports equity valuations. Especially so when you take a look at the tech-heavy indexes like NASDAQ and even the S&P, which is pretty much like the big cap companies are also tech companies that stand a large percentage of the S&P. They are seeing strong valuations, which is then also propping up their growth, right? So take a look at econ data, corporate earnings, which are bullish for indexes. On the policy storefront, in terms of fiscal policy, tariff risks have also not escalated significantly, right? Trade policies appears to be kind of moving in a more so stable direction, and at the same time, potential tax cuts and deregulation, it could also further boost corporate profitability, right? So either way, it's money staying in the system, and this makes US companies more competitive globally, and this supports market confidence, and the consumer confidence is also still pretty high, right? Consumer sides, retail sales that went through are still pretty bullish. So I thought that the NFP report last week could actually cause more of a bearish drop. If you go back to like the NASDAQ right here, I thought that they were going to give us more of a pullback, so we could look for shorts down into these areas of support right here to then look for a potential reaction to go long, which is why I mentioned last week. But unfortunately, we didn't see that, right? We saw the market dropped beneath the 20 EMA right here. We dropped close very convincingly beneath it, and then Monday, immediately the next one, we had this big bullish candle that engulfed the previous candle's bearish high, right? And we saw a retest of that 20 EMA, albeit not positive. I mean, not exactly respecting it, but it closed with a flat bottom, and then immediately the next day on Wednesday push back higher. Right, so essentially this just kind of catapulted the indexes higher, and at the moment, with all of these things being put together, right, strong GDP, strong consumer spending, healthy earnings, and a somewhat supportive backdrop on policies, I can't say for sure that I want that pullback anymore, right? Even though I would love for a pullback to then be on site longer for longs into all-time highs. Take a look at the NASDAQ right now. There really isn't any signs that we're gonna start ranging just beneath that all-time highs before we break past it. I'm expecting these all-time highs to be reached really soon next week. Hopefully, if I could get on site, like if the market opens next week, kind of ranges a bit or even pulls back lower, I could look for some short-term, low time frame longs into all-time highs. Even though technically this is not a good thing to do, but I'm a short-term trader in a sense, so that would be an idea I will be looking to get long into. Taking a look at things like the 12 hour, is there anything that we could look for potential pullbacks into this 20 EMA, maybe something on the 8 hour. Same thing, that 20 EMA is currently the only support that's obvious to us at the moment. What about the 4 hour? Well, there is something right here around the 23k mark, which is just me shifting through time frames at the moment. So we could see a pullback into something like this or a 20 EMA, see if we can see some shift higher, then take out all-time highs to be on site with that trade idea, right? You can use that exact same thing on the S&P 500 right now. Nothing on the daily, of course, apart from that 20 EMA, but you go down to like the 12 hour, 8 hour, 4 hours, just looking for areas of confluence for you to be able to take longs up into all-time highs, because any pullbacks at the moment, they're still looking like buying opportunities at the moment, right? I wanted to see us pull back lower, of course, but unfortunately that didn't happen, right? I thought the NFP could be the trigger for that, but unfortunately I was wrong. Okay, and that's fine. You know, sometimes in trading or investing you're wrong sometimes, because you have to expect that you are going to be wrong. So it's very important for you to manage your risk, make sure that your positions are not crazily over leveraged, and always make sure that you can survive taking a loss and even multiple losses in a row before you get that winner. Okay, so that's very important. So pullbacks into areas of interest on like the 4 hour, the 8 hour, same thing for the Dow Jones. It's just like a game plan for me next week. The Dow is looking kind of weak, so I'm curious to see if there are any levels. Well, we do have this 8 hour support around the 43k mark. We could see a pullback, take out this low, and then see a push higher maybe. Anything on the 4 hour? Yep, we have this 4 hour lining up with the 200 EMA on the 4 hour. We're basing around here. We would like to see that happen next week, but obviously the prettier asset classes to look at, or the prettier indexes, are definitely the S&P 500 and the NASDAQ. Right here, the Dow is looking like it has a lot of areas of resistances if you are looking to take longs into all-time highs, and it looks like there's going to be a lot of things blocking you from doing that. Okay, so that is my idea for the US indexes. Let's take a look at the commodities, right? So gold is pretty much in the same place it's been this whole time, right? Let me just put on the all-time high drawing. So one sec. So all-time highs still intact. We're still ranging back and forth, right? It's been in this holding pattern for months. Now, in a strong risk-on environment, it doesn't exactly have the same safe haven appeal, because gold typically shines when we see a rise in general uncertainty, whether it be from weak econ data or stresses on the geopolitical tensions or aggressive rate cuts. That's what we are expecting, or when we are expecting gold to rise higher. But what's interesting is that even in this current calm market, gold hasn't sold off heavily that we could expect or might have seen in the past, right? It's holding right here, doing back and forth movements, right? It's just holding even in this larger range. It's holding and it's basing on here. So when we get a signal like this, it's telling me that it's holding potential latent bullish moves, right? So when we're in this tight range, in this compressed price section, especially on a pair like gold, we can expect any trigger, things like softer job data, bad tensions, that trigger or a sudden shift that will be in the bullish gold's favor could see gold just break out really quickly higher. Right, this is what I'm looking this picture at. This large impulse move higher, right? And then we are currently accumulating orders. So I'm expecting gold to kind of still be, I mean, I'm still leaning bullish on gold in a sense. So until proven otherwise, until we get a breakout of this recent range, I'm still bullish on gold. Okay, taking a look at silver right here. Silver looks even stronger and even more bullish from a technical standpoint. Right, we're seeing a clear pattern of higher highs and higher lows being made. We're seeing price trade above the 20 EMA and holding above the 20 EMA, or at least chopping between it and then holding above it, right? So we're seeing this, and then recently we just break down beneath this 20 EMA into this area of support around the $36 to $35 mark, and then we immediately rebounded off of that level, and now we're closing and holding above the 20 EMA and trading right around the $37 to $38 mark. So I'm expecting at the moment for price to potentially do an open low high close week into this area of resistance. If we could do that, that would be where my first targets would be coming off of if we are being bullish on gold. And ultimately, of course, I would love to see the this bearish area being engulfed and closed off by price action as you know, the market kind of moves higher. Okay, so obviously pullbacks, if we don't see that and we see price either chopping or pulling back, pullbacks to major areas of support could also offer opportunities if the macro picture turns more risk off. Okay, so I want to see price engulf this area right here. Pullbacks would be long opportunities, right? If we risk off, then obviously we could change more and just have more structural form to see us shift into a more bearish sentiment on silver right now. Okay, so let's take a look at the DXY next. I think I kind of went on a tangent, a bit different from last week, but take a look at the dollar index. It's currently pretty neutral for me, right? So recent data, it does kind of paint a mixed picture. PMI is softer than expected, retail sales is stronger, CPI is kind of in line, which is neutral, PPI is cooler, PCE is slightly hotter a bit. On the labor side of things, wage growth 2.9%, obviously beat expectations of 2.8%. Employment remains steady at 4.2%, which I mentioned just now. And these cross currents have actually kept dollar at the moment in a range bound movement, right? We're not seeing a decisive push from either inflation or a push from growth, and until we see either of those things happen, I think we're unlikely to see a strong directional move just yet, because sure, NFP didn't come in the best, right? It didn't come in the best, but last week's data did kind of make things a bit more mixed instead of just completely negative, right? So this strong impulse move is currently where we're at. Let me just hide the indicators a bit. So we're currently in this impulse move higher, right? We did kind of do like a V-shaped recovery, take out all these recent structural highs. Some of you could be seeing like an inverse head and shoulders. I personally don't trade that, but I think we just broke beneath the neckline right now. We just broke beneath it here. So anyway, at the moment, right, if we are to range, then the extreme levels, in my honest opinion, is around the 100, the $99 to 101 level mark. And the extreme for buys at the moment, I would love to see us respect this general region of 96 to 97, right? So these two areas is where I'm expecting price to trade within at the moment. This big tree pattern leg right here is what we're seeing coming into the charts right now. So obviously, if we are expecting price to just trade in between these levels, you can see a short-term bounce higher, coming to this level, short-term bounce lower, and then vice versa, and just bouncing between the zones without any decisive push. Okay, we're currently neutral on the dollar. So take a look at GBPUSD right now. We just broke above the 20 EMA, right? So I'm very curious to see if we are going to completely take out this structural high right at around 1.35, or are we just going to break above it, not hold, and then come back down, crashing lower, right? Obviously there is no resistance nearby on the daily, but on the 12-hour and the 8-hour, on the 4-hour, we obviously have some areas to be mindful of if you want to take bets, betting that cable will be churning higher as of now. Okay, because the UK data is not looking too strong. Next week we do have GDP coming out for the Great Britain pound, right? So next week we're gonna have that on Thursday, month. We have CPI coming out for the US dollar as well next week, and a bunch of different other CAD releases on not CAD, but we have bank holiday on JPY on Monday, right? We have all of these news releases coming out next week, so I'm very tempted to wait until some of these data is clear. I want to re-evaluate my standings on these currency pairs right now coming into the new week. Okay, so bringing it back onto the charts. So that is it for the pound dollar. Take a look at the euro dollar. Same thing, we just broke above the 20 EMA. Only difference is that we are currently nearing this area of daily resistance. So if we could come into it and we see a shift, it's not looking like a completely bad trade down into this nearby area of support right here, considering I'm entering on a low time frame, right? So trading it just based off the daily is obviously not too good. Your stop loss is like 86 pips, but if you were to trade somewhere where it comes higher, it could be like 50 pip stop loss, 60 pip stop loss. It's almost like a 2.6 hour trade if we do see a shift once we tap the area with a smaller stop loss, for example, right? So that could be a trade I'm looking to take if you do come up into this area next week, because the pound dollar's resistance is pretty far on daily, right? It's pretty far. So definitely the euro dollar is looking like it's potentially going to set up faster than that of the pound. Okay, so take a look at Bitcoin and take a look at what it's currently doing. So Bitcoin is actually currently within this area of resistance, right? If I just pull it here, last week we had this area of resistance, right? Trading just around it at the moment. Right, so if we do see a shift lower, which we haven't seen, right? We did see two bearish candles, which are pretty indecisive because of that long wick to body ratio, and we also did not break beneath that 20 EMA. So if we do see a shift lower this week, we could potentially look for shorts. This is a newly formed area of support, but I'll be looking to look for shorts down into these lows right here, and also the support. If we see a large and obvious shift, those will be my final targets. If you are looking for it to hold bullish, which I currently am not exactly doing so in a sense, because I'm not expecting us to have any more inflows into crypto as of now, that much at least to push price higher into new all-time highs. But if we do see a pullback into this area and it does shift bullish on like the 1 hour, the 4 hour, we see a strong bullish closure, that you could also look at that as a signal for potential continued bullish movements. Okay, but as of now, I'm still not convinced on crypto, so I'm not actually looking to get into any holdings as of now. Okay, same thing for Ethereum, right? Ethereum just skyrocketing, right, compared to Bitcoin, leaving no areas of supports below. But if going to the 12 hour, I'm pretty sure they are. Yep, we have some areas of supports just nearby. So do with that information what you will. I think currently crypto is a bit mixed. There's not much to do for me at the moment, assuming seeing that I don't really trade crypto. but I do look at options on crypto, and also I do have long-term holdings on a few larger coins, right, like Bitcoin, Solana, Ethereum, Ripple. So that's what I currently do on crypto. All right, so 25 minutes. Wow, time goes by really quickly. I'm going to have dinner right now, so I hope you guys have had a great trading week, and we also have a great trading week going into the middle of March right now. So yeah, I'll talk to you all in the next one. Peace.